Daljeet Kohli is also joining us along with Kush on the charts. Nuresh also is here with us now. Gentlemen, all three of you, thank you so much for your time. Daljeet, let me start with you. You know, last 2-3 days, some kind of a comparisons were being made. How US market now is almost 47% of world market cap, and within US, the Magnificent Seven are actually bulk of the gains out there, which means clearly that US market rally is a very narrow and a very concentrated rally. Today also that same kind of a market is panning out. Today's rally here in India is also large cap led, and within large cap also narrow. Do you think there is a risk we run for the market, at least for 2024, that broader market participation, which has already been so heavy in last 2-3 years, may actually go sideways and it's a large cap which will move, select large caps?
Yeah, good afternoon, Ajay. I think, this comparison is correct. And in fact, if you remember period before COVID, I think 2018 onwards, 18 to 20, Indian market was also exactly similar way, that just as what US market is currently. There they have this Magnificent Seven. We used to have those five stocks, no, HDFC Twins and Reliance, and so 4 or 5 stocks were just running at that time. And then it is only towards the starting of 2020, from January onwards, when we saw that the market started opening, and then March we had COVID. So I think as of now, for last almost 6-7 months, most people have been expecting that, because small caps and mid caps have run so much, and the premium valuations are far ahead of their historical averages. So it makes logical that probably the large caps have to catch up. Now there are only two ways: either the large caps have to catch up, and the small cap and mid cap have to come down. Then only this market will converge. And we know that markets have a tendency of coming back to mean always. So that expectation was there, but just because we are expecting that large caps have not moved, therefore large cap will start moving, may not work out as in that fashion, mainly because as of now, the construct of our market is also changing. No, now that this SIP money, this HNI, ultra HNI money, that is flowing. And those people don't normally go with the big names. They, in fact, if you see the people like us, AIFs and PMSs, we tend to avoid the first 100 companies, no? So most of our portfolios you will find, and like that, there are n number of PMS and AIFs which are working right now. They always go towards small, mid cap, and where the alpha generation capability and the probability is much higher. So just taking a broad call that perhaps large cap will perform because in US they are performing, and because in India they have not performed for last 1.5 years, they will start performing, may not be the right thing. It will depend upon stock specific, and it will depend upon the sector where you are. Yes, as of now, in the banking sector, I think private banks have been far too laggard for quite some time, and that probably their time will come now.
Absolutely, private sector banks have been a laggard, and seems like the time will come back. Good afternoon, gentlemen. This is Vinny this side as well. Kush, let's just look at it in terms of the charts also. Firstly, for Nifty Bank and the Nifty, how are you seeing it? Currently today, Nifty that 22,150 levels, what we're talking about as well. What is it that you're getting in terms of an indication there for both these charts?
Hi, Tanya. Very good afternoon to you, to Ajay, and to all the viewers. We are seeing quite a bit of an uptrend, building up on both the charts. I wasn't surprised to see the Nifty sort of stuck in a range just for today. Could happen for a day or two, and that's largely because of the weekly expiry. We've been knocking at the doors of 22,150 for a while now, but I think we'll probably just not only knock, perhaps break the door down. I have a positional target of 22,500 on the Nifty. Perhaps sometime next week, the Nifty will start making a move towards that. Bank Nifty, we've maintained a view that 46,800 was the hurdle to watch for. Today, it's been broken convincingly. I'd give it a day. I'd give it a day more just to see if we are able to sustain above this level. But if we are, then 48,000 and 48,500 are the next level to watch for on the Bank Nifty. We all know the kind of underperformance that was there on the Bank Nifty. There is a bit of catching up to do. And if you're able to sustain above 46,800 for one more day, I think 48,500 are is the next level to watch for. Just a quick word here that tomorrow's the Bank Nifty expiry, so perhaps this too could remain in a range. But other than that, I think the momentum is also upwards here.
Nuresh, what are your thoughts on HDFC Bank? Today, I want to talk to you about more positional view. Say a 6-month bet if somebody takes from current levels rather than day-to-day view. What are your thoughts at 1450?
So the way to look at HDFC Bank is what has happened over the last 4 years. Now, if you go back to pre-COVID, HDFC Bank used to trade around 1250, 1300 levels. Then before the demerger, before the merger got announced, the stock had made a bottom around 1300 odd levels. After the demerger got announced, the stock went to 1700. Again, it made a low around 1250, 1300 levels. And now recently the stock made a low of 1350. So basically, if you were to go towards a period of 4 years, the returns come down to zero. So the whole de-rating exercise is over, various things which you could look out from. From here on, your bet is till the time it doesn't break the recent lows of 1350, you have a risk reward wherein the stock could recover back to 1480, then maybe even 1600. So overall, the view is the bottom is done. Whether it will be a outperformer, that's a question mark. Because when you look at a SBI, the stock makes a new 52-week high, all-time high. And that time also, HDFC Bank is at 1400, you're at 680 on SBI. So the relative choice is a problem, but from 1400, 1450 levels, the risk reward is in place. You have a downside which can be limited, but upside also is similarly not the best performer. So we could put it in a market performer case.
That's the view coming in from Nuresh. But, let's also listen in to what HDFC Shashidhar had to actually say. He's the MD and CEO at HDFC Bank. Like we spoke about, there were bites that came in from them as well, which actually kept the stock abuzz today as well. So listen in to what the management had to say.
We're not in the quantity game at all. We don't want to grow just for the sake of market share. Very clear, this is not a new philosophy. This is a philosophy that we have been building our franchise over the last 30 years. And we're proud of that, but we're not going to be compromising both on margins and risk. So there is a certain trajectory that we will operate, a band that we'll operate, whether it's a margin band, whether it's a ROA band, and that is something that we are very particular. If there is some kind of a disruption there, happy to go slow. So this is the period of transition we will have to adjust to. And so our anchor is that as a company for 29 years, we have always been consistent on the bottom line growth, which you can call it the earnings per share or whatever that is. And going forward too, we will have that as an anchor. So a lot of other metrics you may want to sort of ignore because of the transition, especially on the loan growth. And that could be a tad lower, but that's all right. I mean, that is something that is not going to be at the cost of my earnings trajectory.
That's HDFC Bank commentary, and that is sparking a rally. Daljeet, I want to talk about not HDFC, but some other stocks from the auto ancillary space. Sona BLW, after a very long phase of consolidation, the stock is gaining today at 4%. I want to talk about the business model, not the stock. I know you cannot recommend stocks, but I want to talk about those auto ancillary which have a EV angle, plus which are not doing run-of-the-mill kind of products, more technological advanced products like Sona. What are your thoughts there?
Yes, that is the area. In fact, the only problem with this stock was that it was highly overpriced for when it came at the time of listing. People just gave it so much of valuation that over next 1.5 years, it has just gone into the consolidation phase. In terms of business model, I think it is the best story to play for an EV cycle, EV conversion of engines from IC engine to EV. This will be probably the best. They have the maximum R&D there. They have the maximum projects there. Same way, we have chosen 1 or 2 auto ancillary companies in our portfolio, which are also in similar lines, like they are doing assembly work for engines for big names. If you see after 5-6 years, luxury car market has blown up in India now. What we had expected in 2015, that has started happening now. So the numbers, our projections in 2015 for next 3 years, what we had penciled at that time, they have started coming now because last 4-5 years, everything went wrong for them. So companies like Mercedes, BMW, and all these kind of companies are doing roaring business. So guys who are ancillaries who are positioned to take cater to these companies, they are definitely a big beneficiary. And I think this runway will be much longer because now the economy is in much better shape. People's capability to buy these kind of cars is in a much better shape, and financing availability is there. So in auto ancillary, one has to be very choosy basically. There are many options available. I'm not saying that anything related to ICE engine is going away. We are not penciling in our models that ICE engine in any case is getting extinct or it is going to reduce to a substantial extent. I think at the most EV penetration in next 5 years, we are penciling is around probably 25 to 30%. So that means ICE engine will also stay. Point here is that companies who are capable of adapting to these changes, and companies who are more attuned to the change in lifestyle, the change in the buying behavior of vehicles, that will be more important. So ancillaries, if you have to choose, think on those lines.
Right, okay, that's the view coming in there. But, on that note, let's just slip into a very short break. We'll be back after the break. But seems like Nifty seems like giving up that gain that it was seeing, but flip-floppy day. But we'll be back after the break. Welcome back, and you're watching Closing Trades on ET now. 22,140 levels is where the Nifty continues to be at. In terms of individual movers, Z continues to be the top gainer on the FNO side. Locked in upper circuit, 10%, around that side as well. 10.5% is what the gains is. Power Grid, that's an interesting one. Deepak Nitrite is another name that has been buzzing away in trade as well. Daljeet, I just want to talk to you about Deepak Nitrite as well, right? What a move that we've seen in the stocks as well. When you overall look at the chemical pack as a whole, I want to understand that how are you looking at this chemical sector? Yes, in the last few quarters, they've been a bit under trouble as well. Not good in terms of earnings that we've seen so far. Today, we actually managed to speak to Balaji Amines also as a management. They said that, now seems like the worst is over and they would see better things coming in. In this chemical sector, where would you look at? Anything that you're finding attractive, given that we've seen a fall coming in, valuation-wise, what is looking nice?
So as of now in the sector, what we are looking at is agrochemicals specifically, because we believe that it is going through the worst of its phase, and that phase will probably end in next 1 or 2 quarters. Now we have been expecting this in the last quarter also, but it didn't happen. Maybe in the next, our wait will be one more quarter or so. So 1 or 2 quarters, we are expecting that agrochemicals should see some positive movements. Now the entire sector is going through channel destocking, a lot of pumping and dumping by China. So all those has had an impact on these companies' performances. But what after this quarter numbers, current quarter which ended, most of the companies have given this commentary that probably things are near the end. They have not started turning around. So we have to wait for the turnaround to happen. Meanwhile, some of the valuations have come off well. Most of these stocks had gone very high valuation, so which was unjustified. Now most of them have taken that back. So some of that froth is gone, but still I think some more valuation catch up has to be done. Means valuations have to become attractive. In case of agrochemicals, they are at the lowest at the bottom of valuation also. So that is why we are looking at that sector. Specialty chemical, unless we have a very specific stock where there is some specific activity happening, meaning they have some CDMO business, some particular client, then only we'll look at it. Otherwise, we will tend to avoid that. So right now, we only have 2 stocks from agrochemical side in our portfolio.
So that's a take coming in over there. Nuresh, I want to check. Remember, a few days back, we spoke about Ceylon. Around 480 levels is when we spoke about Nuresh. Now at 525, how do the charts look here?
So the chart is very interesting because after that initial bump up which happened post the management change, the stock has consolidated here around that 470 to 550 mark. So in the last 2.5 months, we've made two bottoms around 470. On the top, there have been four tops around 550 levels. 2 days back also it had seen a spike where it made a top around 540. So if it crosses 540, 550, it becomes a short-term momentum trade wherein it could make a dash towards 620 to 680 levels. So looking at it, watching out for a sustained move above 540 to get into the stock. Longer term structure still remains very positive. So eventually I would expect that breakout to take place. The stock has gone nowhere for the last almost many years. The stock used to be 450 back in 2009 and the all-time highs are around 650. So that's a possibility on the upside for the stock.
Talking about energy, how can we not talk about Swan Energy? Kush, today, my colleague Cheryl broke the story that there's a QIP underway, good response coming in out there, almost 4,000 crore used for modernization of their one of their yards and of course reduction of debt. But at 740-45 odd, Kush, how does the charts look for Swan?
Well, very encouraging. Incidentally, it's been our call for a while now. Even today, it is one of our calls. The stocks just taken a couple of breathers. Otherwise, if you see the momentum is intact. For the most part, the stocks actually respected its 20-day moving average on the downside and moved higher. So I think all in all, there is traction in this. We know there is traction in the energy space. So I think there are good days to come for this stock even from here on. I think 800 from a positional standpoint is a very easy number that one can look at. Given that on monthly and weekly it's a little overbought, perhaps if someone is looking for a positional buy, then someone they could add some quantity now and perhaps going forward on dips. But otherwise, on the whole, the stock looks poised to touch 800 and move higher from there as well.
Okay. 800 and higher from there as well is what you're saying, Kush, and that's for Swan Energy. Surely an interesting one to watch out for. But Daljeet, I want to talk about Zomato. That's been trending and it's not stopped trending. Since this time has started, there's no stopping it. Today also, we've consistently seen that up move continue for something like a Zomato. Any specific view that you have in terms of these new age tech companies? What would you look at it in terms of that as well?
See, we have not taken any position in any of these new age companies in our portfolio. No, reason being that first that most of these companies were loss making and all these numbers that you see sometimes ESOP coming in, ESOP going out and all this accounting thing, which is making and this adjusted EBITDA, adjusted so much things, all these adjustments we tend to avoid. We'll let it play to come on its own and see actual numbers should flow in, then we will have much more confidence on it. Now, in terms of business, yes, these companies are doing great businesses. They are developing those platforms and potential is definitely very, very large. With this just 2-3 rupees of platform fee, these guys can make huge money because the number of customers itself is very large. So there is no denial of that fact. There is no controversy on that part. But point is that what valuation you are giving and how to value these companies. Basically, that is what more important is. When it was at 40 rupees, people thought it was very costly. At 150, it is still cheaper. Probably we can justify same thing at both the levels. So best thing is to when the company is going through these transition phases, it is we would rather avoid. We'll wait for some more time. There are so many other sectors and companies available for investment. So we have taken a conscious choice not to get in.
Daljit, before we let you go, what have you been researching lately to add or have added, just for understanding sake?
So, Ajay, we don't have too much infra in our portfolio right now. In fact, that was the most least exposed sector in our portfolio. I think not even one stock or that too very small. So we are now looking at some of these road construction, ports, and related infrastructure companies. Basically, we are of the view that if you see in the last 1.5 years, the ordering activity has gone down substantially. There was almost no order from Ministry of Road and Transport. So probably after the election, this pent-up demand will come out and then our companies, there could be a good potential for many of these companies. Then there have been stated objectives of this government on water and power and all those things. So those such related activities. So for if we have to play for water, we can play through pipes. Who are guys who are selling more to take water by in sanitation, those kind of things. So there are a lot of sub segments of infra where one can look at. We are looking at opportunities there.
Okay, that's the view coming in from Daljeet. Maybe we could look at the infra side post-elections. We could see something happening there. Thank you so much, Daljeet, for joining in with us on Closing Trades on ET Now.